How big of a move is this, the latest trade headlines that we're hearing? What does it mean for stocks in Asia and stocks here?
It's already in the price. I mean, we've been knowing for a few weeks now that a deal is coming. We need to wait for the details. But I think we've gotten a bit ahead of ourselves here and expecting that to solve all our problems. And one being that the global trade cycle still is very weak. The electronic cycle is weak. We have weak growth in Europe. So is this really going to have a trigger revival in trade? That's doubtful. Now, it removes a tail risk, but it's not necessarily sort of the big catalyst for the growth spurt in itself in Asia.
Why did Chinese stocks rally so hard in the last 6 weeks then, if everything was already kind of out there and known?
Well, in the last 6 weeks that we kind of firmed up the expectation of something coming through. But now over the weekend, we've extra headlines that's sort of filling in the blanks. And I think the rally in itself is really pricing in a fairly positive deal. And if we want to go further from here on out, we need to have extra catalyst.
So, right, you've been pretty positive since stocks really took a tumble in December, but now you're kind of looking at things. We've come a long way pretty quickly.
We have, and I mean, in December we were down 14%. We rallied really hard here, not as much as China has, but really come back to kind of November 30th valuations. So I look at it as now as, yes, a lot of this stimulus quote is baked in, but if you look at the overall market, I still think the areas that we can still go forward, if this deal is done properly and there are specifics that can help, especially in the industrials, the cyclicals, the financials, they've come back, but not as much as the rest of the market. And I think on a valuation basis, that's kind of where the opportunity is going to be, because really, if you look at it, what are the parts of the economy that haven't really come ahead? You know, FANGs, tech, they've all kind of rallied. But let's look at specifics, especially in sectors where there's going to be opportunity for investors. And I think that's kind of where we can put some money now.
I mean, for the trade deal to be kind of a catalyst, you would think it would have to coincide with earnings estimates troughing, right?
True.
I mean, or become a catalyst for some companies. True,
and kind of our belief is that a lot of companies were overly being conservative, because you really couldn't tell to anybody what are earnings going to be if you're an industrial company, if you really, your market's closed. So I think you're going to see some opportunity there for some earnings revisions. Again, this is based on what we think could be a positive outcome of these trade talks. If the trade talks kind of go back and forth, then you get that tail risk again, where people discount, wait a second, we are going to a slowdown, and could this kind of be a recession? But today, if you look at the market, you look at kind of where the 10 years slowly moving up, the 2 years kind of staying where it is, it's giving you a positive indication. I'm not saying that this is the best thing going forward, but I think these are good things to look at to say, well, the market's on the right way.
So, what do you, just real quickly, what do you think about the headlines from what President Trump was saying yesterday at CPAC concerning the Fed and Jay Powell? Does that concern you at all? Is this just kind of entertaining at this point, or is there any risk potential?
I don't think there's any short-term risk, because I think the Fed has basically said we're going to look at the data. But I think it's him kind of being in front of the Fed again to say, look, if all this happens, we get the right trade deal, things get better, and you see some inflation, don't do anything. And I think he's just trying to get ahead of it, as opposed to last time I think he felt he was behind it.
Fred, what's your view on Chinese economy at the moment and the key data points you've been watching?
Well, that's almost a bigger issue right now. It's no longer the trade issues. It's on the domestic side. What we're going to see tomorrow, Li Keqiang is giving his big speech to kick off the MPC. And what are we going to see in terms of stimulus, right? The expectation is tax cuts, probably more monetary easing. But it's clear that a lot more needs to happen. We've seen at the beginning of the year, the run rate probably still be a bit weaker on the domestic side. There's, a bit of softness in the labor market. We've seen softness in the housing market. And if you allow that to fester, it would trump any positive from the trade side. It's really about domestic demand, not about trade at this point in time, and they need to juice up the economy much more.
And a couple of people have got more bullish on EM in general as the Fed has pivoted and the outlook for the dollar perhaps slightly less strong. Does that tally with your view, particularly with Southeast Asia?
Yeah, it does. But we would argue that it's not just the Fed not hiking is a positive thing, but you also need the growth catalyst come through. You need a stronger trade cycle. You need China to reaccelerate. And what's in the price is already the Fed and maybe a trade truce. But what's not yet clear is to what extent we're going to see China reaccelerate very quickly, and to what extent we're going to see trade actually revive. It might take a little bit longer to sort of come back.